Tim Henry, Managing Director of ADM Australia New Zealand.
Tim, you were having a look today at the various commodities that we produce in this region, in central western New South Wales. So for a start, looking at the wheat side of production and marketing around the world and domestically, what indications are you getting there with regard to the next 6 to 12 months with prices and production?
I think if you look at it in US dollars, there's plenty for production globally. There's no shortage, so I'd expect prices to move sideways. But if the Aussie dollar is to continue its downward trend, then we could see prices supported. One of the difficulties we're facing here in the east is that the price is a premium to our counterparts in the west of approximately $20 US FOB.
Why is that such a big difference at the moment?
It's flowing through from the drought last year in northern Australia, where this region actually a lot of the grain headed north to feedlots in the Darling Downs. So it's basically there's very limited old crop carryout and uncertainty over the El Nino. Producers aren't marketing with the concerns on production risk at the moment. So if we have a good spring and there's an exportable surplus, we need to compete on price even just with our cousins in the West Coast.
So it really depends on climate in the next few weeks on whether we produce a surplus or we only meet domestic demand on the East Coast.
That's right. That's right. In the next 6 weeks is the key period. I mean, we've had some nice rain in the last few days, but another rain like that in 3 to 4 weeks would be ideal.
We've seen US prices wobble along within a narrow trading band, but what's the potential that they could break out of that and go on the downside and have impact on particularly the world market price, but also maybe domestically?
It's a tough one. I mean, we are at the low end of the recent range, and it has continually been proven at below $5 cents a bushel on Chicago, the front month. The market doesn't like to be that low. There is, I would say, a burdensome supply, but enough supply of wheat globally at the moment. But I also think the prices are quite low, and in the cases in Europe, below cost of production in some cases. So I think you'll see farmers reluctant to sell, and that in itself will be supportive to the sideways trend.
Looking at the other major grain in the region, that's barley, and what are you seeing there?
We're seeing good demand historically from China for malting barley. For feed barley, we saw good demand last year, but as China's changing its import permit rules, there could be difficulties getting feed barley into the Chinese market this year. So then the next export market, if we look at the export side, is Saudi Arabia, and we're too expensive relative to other origins currently. So yeah, barley here is a difficult one. In this region, typically most of the barley stays locally anyhow, so it's going to be how it prices relative to wheat and other feed grains into feedlot rations.
Why is China changing the way it's issuing its permits?
It's had a huge growth in local grain stocks because of approximately 20 million tonnes a year of sorghum and barley and DDG entering the country without any regulation has been displacing their local corn, and that's been adding to their local stocks at the rate of 20 million tonnes in the last couple of years. So that's creating issues with storage and obviously financing of those stocks. So China's wanting to let's say readjust that flow of imported grain while still wanting to support their local farmers with high prices.
Looking at the oilseed market and canola, but also the dependence on soybean, and what are we looking at there from a world perspective with oilseed production?
Yeah, oilseed production looks quite stable also. USDA put out a surprisingly high yield last night at 46 bushels per acre, compared to forecasts of 44.5. So production looks okay in the near term. We still have to get fully through August, so if there's a high pressure ridge or hot conditions in the US, yields could still come back. But then the next real issue would be for production would be the southern hemisphere crop in our summertime. So really influencing probably Feb, March.
What about domestically? What's the crop looking like, and what potential impact could that have on demand, particularly on the East Coast?
The crop here does look good. I mean, there's definitely a lot less area this year as farmers actually switched more or less out of canola with prices under 600 port into barley. So they've put less canola in, but still we think there'll be, if provided the springtime's okay, an exportable surplus out of the east coast, and in that case we're probably still sitting historically or relatively high values relative to other origins such as the EU or Canada.
Tim Henry from ADM Australia, thanks for talking with us today.
Cheers.